Hello again, everybody. We got another video on the job search and investor relations. And in this video, we're going to talk about ATS performance, applicant tracking system performance, and days to rejection analysis. So let's get into the data. And from a high level, I'm going to talk about an introduction and some definitions. And job seekers really have no way to really assess their performance because there's no feedback in this process. And so our belief is that time to rejection or days to rejection is that key performance indicator of how well your resume and materials are actually working. So let's get into our DTR analysis definition. And the idea is it's really just the number of days that lapse between when you initially submit and actually receive a rejection email from the company regarding that job. The key is the longer the rejection timeline, the more likely the candidate was considered. Clearly the caveat here is that your resume and materials are actually a good fit for the role you're applying to. And to give you an example, our investor relations DTR is pretty high. When it comes to FP&A and CFO roles, it's a lot lower, partly because our tenure is shorter in those seats. So here's some general guidelines as you're working through your job search. A 0 to 2 day rejection, ATS is killing you. The sweet spot is this 15 to 30 day rejection post submission. And that 30-day can extend significantly depending on if you've had conversations with the company, done interviews, etc. So let's look at the actual data and get into how we think we're doing. So if you look at the data, this is 3 years worth of data across Workday and non-Workday human capital management platforms. The high was 91 days in December 23, and the low was 4 days in June of 25 and 5 in September of 23. Overall, we seem to be performing pretty well. So now let's look at the same chart and layer in a couple of key breakpoints on the data. The red line is 2 days or less. We're not being rejected typically by the ATS. It does happen to us, but typically we think a human is actually looking at our resume. And the blue line on here is the gray zone, less than 15 days. 7 to 15 days means you're in a gray area. Somebody probably looks at you, you're a borderline candidate. And then the aqua line is that 30 days, which the 15 to 30 day range is the sweet spot of where you want to be landing, because it means that you probably got to the hiring manager, or our hiring manager had to reject you if you didn't go further in the process. So this is just a simple comparison of both Workday and non-Workday platforms in our DTR by each platform. And you can kind of see how it ebbs and flows over time. And it really, the presidential election had a real impact, and then Workday underperformed for us after the presidential election. Now let's get into a couple of charts that show Workday versus non-Workday platforms. Right now, this is what our Workday days to rejection looks like. And really 8 out of 12 months, we saw a DTR of less than 15 days. That was 75% of the year in 2025. We were underperforming on Workday applications. And May and September was awful. We were 2, so we were getting killed by the computer. Our resume was not working when it came to Workday platforms. And I think a lot of people have seen this in the market, where you've seen news articles about in the Wall Street Journal of applicants over 40 saying, hey, I applied to 40 jobs via Workday, I got rejected to all of them. On the next chart, let's look at the non-Workday platform. And here, what's interesting is 8 out of 10 months, we had a DTR of greater than 15 days. So we were working really well for most of 2025 when it came to job postings outside of Workday. And what you can see is if there's no number here, that means there were no non-Workday HCM rejections in that given period. But what you can see is we've really accelerated from July into December in terms of the length of time we stay in funnel on a non-Workday platform. We were seeing a great increase on Workday as well. And so what we're seeing is that the shift from Jobalytics and just keyword stuffing to a narrative-driven keyword resume helped driven by Gemini is really driving a change in results. And what we're actually seeing as we enter January, to give you a preview, is that we're outperforming on higher level job searches. And because our resume is being optimized so well, we're a quick reject on lower level, tier 2, tier 3 job searches. Because if the resume gets to a hiring manager, the hiring manager is like, well, Steve's too good. We like this resume. It's too good of a resume. Why would he come here? He would leave as soon as a better job comes along. So this is the danger of using Gemini to optimize. I think it works. I think it works well, and you should be using it. So that's the conclusion. Gemini will help you get a better resume if you're asking it the right questions. And in my case, I've developed an 8-phase audit that I can work through to optimize my resume based on job description, strategic scenario of the company, and competitive benchmark of who I think might apply for the role. And all of these things allows you to better own in and match your data to the job description. Because remember, at the end of the day here, what you're trying to do is sell yourself. And it's not the idea of the generic Steve Rubis is a sell to every person. You have to use the job description in your resume to call out what are the top 3 key skills I have that I need to really drive a narrative around to get that company excited to talk to me. And so we did this Google Gemini analysis recently. These are some slides that we'll walk through again. As you can see, it illustrates, what Gemini has done for us in our job search. Like throughout 25, we were kind of either underperforming the second quarter or just average in the first and third quarter. And as we got into the fourth quarter, we really saw an increase in alpha around our resume. And these are some of our best performing job, applications of the year. Equinix, it's a 14 to 19 alpha, depending on how you calculate that score. Komodo did well, and we did really well there. Booking and Lockheed, we had some really good opportunities throughout the year. And as you can see, the market has gotten much more efficient and quicker to reject people throughout the last 3 years. And finally, this really vividly illustrates the value of Gemini in a job search or any AI platform that you want to use, as we're seeing a lot more strategic finalist roles, and we're really getting rid of, being the quick hook in the job search. And so in the appendix, these are just our quick calculations. Resilience score is your days to rejection times the applicant count over 100. That tells you how strong your application was. And then the alpha score is your days to rejection versus what the market expected DTR is for that given volume. And you need to use Gemini to help generate the denominator. But it's interesting to look at these pieces of data because it really allows you to own in on what's working and what's not working. Thanks for watching.